So they're hearing things from all these different customers, and apparently they get a lot of very different messages, right? So at the time we were talking to them, obviously they'd been getting pummeled for a little bit on the stock, right? And the retail community was up in arms, and that was what made him laugh, right? And he goes, well, I think that sometimes you just need to recognize that people aren't really willing to understand something beyond what they can digest in a soundbite. And if that's all the time that you take to learn something, you're always going to be surprised by everything that happens all the time. And I thought that was a pretty insightful thing to say, because it's very true, right? If you get a very surface understanding of something, particularly in equity like this, you're not going to understand why it moves and when it moves and what causes the movements, right? Everybody thinks that it's tied to one event, right? We try to rationalize things through one specific event. And at the time, it was the ATM, right? And everyone thought that every time that the price went down, it was the ATM no matter what. Even though, we're not going to beat the ATM to death because we've talked about that on several episodes already in terms of how they have to execute that into the market. But we're always shooting to understand something in that simplistic of a view. And the reality is the markets are anything but simplistic, right? And when you have a stock where the derivatives market is as large as the entire market cap of the equity, you've got a lot of things that are at play that are going to whipsaw that stock around. And that's the whole point, right? That's the whole design of this. It's the product that they've created. That's the beauty of the financial engineering that we've seen here, is that you're going to get those wild outside moves that keeps this volatility over 100 while Bitcoin's at 60, right? So when you do start to think about that, there's a lot of levels you have to go to really understand it. Even when you understand what's happening at the different levels, tying them together is almost impossible, right? It's why nobody can really time the market ever, even on these events. We all try to decipher and figure out what this means, but it's hard to get to the full connected picture of how everybody's incentives are going to shift at any certain point in time. And that's the part that people grapple with, particularly on MicroStrategy, right? Because the moves are so extended in both directions that they go, that it's very confusing, right? You're expecting price action to slow down at some point like it does on a traditional equity and stabilize. And this one just V reverses all the time, right? V reverse at the top, V reverse at the bottom. Like it's, you get that gamma flip and it's off to the races the other direction.
Back to the channel. That was Ben Werkman talking about MicroStrategy. Stay tuned to the end. He's going to be talking about the preferred stock that MicroStrategy is going to be doing very soon and what that means for the company. Stay tuned for all this information. Then be getting into some news before that. Like, subscribe for more content. We have new content coming out every single day. But you can see right here, MicroStrategy shareholders can now vote on increasing shares to buy more Bitcoin. So wherever you hold your MicroStrategy on your brokerage, use Fidelity, you can go over there and vote on some of the proposals they have. They are basically trying to be more creative to the Bitcoin per share. So go ahead and vote on those guys. There's about 4 proposals that you can vote for. So check that out if you haven't already. And then the most actively traded US stocks yesterday for Friday, January 10th, we have MicroStrategy still in the top 10 at around $5.4 billion. Still a lot of active trading value over on MicroStrategy, even though the price has come down pretty big from the all-time high. That is pretty good to see. And you can see right here, MicroStrategy is trading at $327. You have Bitcoin currently at $94,622. So not too much movement right now. Maybe a good time to put some option trades in while implied volatility is low. And if you want to trade options, you can over on MooMoo. We have an affiliate link down in the description below. If you sign up using that affiliate link, you can get up to 15 free stocks valued up to $2,000 each per stock, potentially. Check it out. It's free money. And they also have a lot of good deals. Like you can get 8.1% back on all of your cash. You can check out MooMoo, pretty good brokerage there. And then I want to share this chart from the Quant Bros. This is something that they put together. And as you can see right here, you can see the Bitcoin held over time for MicroStrategy, the Bitcoin assets, millions of dollars that it's worth, and then the total liabilities. And if you look at it right now, MicroStrategy is holding over 447,000 Bitcoin at a Bitcoin price of $94,000. That's going to be around $8.3 billion worth of assets, and their liabilities are around $7.5 billion. And as you can see right here, the average of liability to asset ratio is around 18%. And over time, you can see over the past year that has come down significantly. And MicroStrategy has had this average of around 25% where they want to keep that Bitcoin assets to total liabilities. So you can see there is some room for MicroStrategy to raise more debt to buy more Bitcoin. So we'll see some more convertible debt offerings potentially to get this closer to 25%. And even back in December of 2023, they were closer to 31%. So it could even go higher. So that just means they'll be raising debt to buy more BTC. And that's very accretive. And also the preferred stock offering that's coming out could potentially not go in this total liabilities category because there is a dividend tied to it. And in the clip I'm showing you guys of Ben Werkman, he explains that. So stay tuned for all that. But this is a great spreadsheet that the Quant Bros put together. Make sure to check them out over on Twitter. They also have a YouTube, so check them out. Publicly traded AI firm Genesis Group buys an additional 5 million Bitcoin. Genesis Group adding to their stack. They have a target of getting $120 million worth of Bitcoin. Right now they have 35 million. And then we have another company, Heritage Distilling, announces a Bitcoin policy. So they're accepting Bitcoin as payment, and also they're going to be using Bitcoin as their strategic reserve, putting it on their balance sheet. Not a huge company. Their market cap is around $7.58 million. But just another company that believes in Bitcoin. This is a distilling company, so definitely good to see there. We'll keep you guys up to date with how much Bitcoin they're going to buy, how much Bitcoin they hold, things like that. And this is something we missed from early in the week on January 6th. KULR has acquired another 213 Bitcoin. They about doubled their stack. They have a BTC yield of around 93.7%. They're currently holding around $42 million. So it looks like KULR is looking to buy more BTC there. So make sure to check out that stock if you haven't already. And then North Dakota becomes the 5th state to introduce legislation to establish a strategic Bitcoin reserve. So we're just seeing all of these states start to file for a strategic Bitcoin reserve. This is the 5th state to do it. It's going to be really interesting to see if these actually get passed through and some of these states start to stack Bitcoin. And then we have Meta proposing to access adding Bitcoin to its treasury by the shareholders. Now, this is the same thing we saw from Microsoft, but Microsoft wasn't even close to that vote passing. I think the vote was literally 0.2% of people voted for Microsoft to pass adding Bitcoin to its treasury. So we may get the same thing, but with Meta, but we'll see if Meta adds it and Microsoft doesn't. It's going to be good for Meta going forward, and it will probably give them some leverage on some of the other Magnificent Seven companies. But I do want to get into this clip from Ben Werkman. Thank you for watching all the way to the end. In this clip, he talks about the preferred stock, how it's different than the convertible bonds, and how it is so powerful. So make sure to watch this one. Leave your thoughts in the comment section below. Like and subscribe for more content. Let's go ahead and check out this clip.
What's interesting is the preferred could actually become far more accretive than even the convertible bonds are, right? Like right now,
Absolutely.
convertible bonds are the most accretive because that's what we've seen, right? Where they're getting these 55% premiums. But now you've got to look at engineering how you step down that volatility further, right? The convertible bonds are not as tampered down in volatility as these fixed income, preferred bonds are going to be. And that might mean that you do things like that conversion premium might be 100% or 120% because you don't want that equity characteristic of it to start kicking in and whipping it around as much. So you could see some terms in these that are pretty shocking from a preferred stock because they're intentionally trying to make these far less volatile than everything else is, right? They want it to rely on the fixed income component for a very long time. And the people that are buying these typically aren't looking for their preferred stock to end up converting or being converted over to common stock in 6 months, right? They want a longer duration on this, which means that you might see things like, yeah, they might have 5, 6, 7, 8% dividends on them, but MicroStrategy might have a no-call period of 5 years or something to that nature, right? A longer no-call period than they've had on the bonds, making sure that the people holding that preferred stock know that they have the ability to hold it for the fixed income payments for longer. But in trade for that conversion premium could be really significant, right? So those are going to be kind of the things you're looking for, because they have to engineer that reduced volatility, which means that, call it a call option feature again, right? That equity component of this preferred stock, where it, starts to be more like the equity when it becomes convertible into that common stock. They need that to be farther into the future, right? They don't want it to happen right away when you're trying to lower the volatility down to 30, right? If that's what they're trying to shoot for, they might want this to be half the volatility of Bitcoin. So the terms are going to be fascinating on this, right? I don't really know what to expect. I've gone out and, done some pricing and stuff on my own to figure out how would I engineer preferred stock that acts as a fixed income instrument for long enough where it kind of takes that volatility out that we've seen even in the bonds. And that's tough to do, right? Because the volatility has been really high. And those equity features on those bonds have been kicking in really, really fast. So if you're trying to make these act like fixed equity and you've got a 5-year no-call period on this because you're trying to guarantee these pensions or endowments or insurance companies or whoever's buying these, you're trying to give them that stability of the fixed income payment over time because that's what they want. There's going to be some interesting changes in the structure for how these are going to be issued out to the market. So these could end up being wildly accretive to Bitcoin per share, but you've got a little math to do, right? Because as we mentioned before, you've got to fund these dividends somehow. So it's not as clean of a transaction as 0% converts are because there's no additional cash requirements there. So right out of the gate, they can very easily say, here's the impact to Bitcoin yield, right? Because they know what essentially the outcome is going to be. They can count on the shares. Now you've got to look at, okay, how many shares the preferred stock's going to convert into. The piece you don't know yet is how many shares is it going to take you to fund the dividend, right? That's the part that you don't know yet. So seeing how they do this is going to be pretty interesting because there's a lot of moving pieces here, and it makes that calculation for the Bitcoin yield a little more complex than it's traditionally been. And it might just be that they're going to ignore that part of it when they first do the announcement, right? Because reality is, in the grand scheme of things, the amount that they're going to be taking out of the ATM to fund the dividend is, I'm going to say, pretty small. I mean, it's, $100 million a year, 150 million, which is a lot of money, right? I'm not saying it's not, but in the grand scheme
billion that was raised in
the
Q4.
volume,
yeah.
But they get to drop those shares over a period of maybe 5 years, right? So if they're issuing those shares when MicroStrategy is, $1,500 a share, they may issue far fewer shares than we would anticipate that they would. They can offset some of it with cash flow from operations, and some of these other bonds will probably roll off. And if they can replace those with 0%, then they've at least freed up, maybe 60 million a year,